I'm Matt Bishar with NAREIT, and I'm in London for the European Public Real Estate Association's annual conference. Joining me is Joe Harvey, President and Chief Investment Officer of Cohen & Steers. So Joe, looking at the European market, how do you see the listed property market performing within the overall European real estate?
Well, it's about 16% of the global universe of real estate securities, but our view is that it's going to be more challenging for Europe compared with other parts of the world. And of course, we have some significant issues with the sovereign debt situation, and that, which has led to austerity measures in many countries, we believe will impair economic growth. And of course, economic growth is the most important driver of real estate fundamentals. Over the past months, the stock prices have corrected to reflect that slower growth and potential issues with the financial system. And while in the U.S. we believe that the financial system has been pretty much cleared out, we still have a lot of work to do in the European banking system. So I have some concerns about the effect that may have on financing for real estate, for cap rates. And though we think that it's going to take some time for the banks to recapitalize, it likely will end up creating some more opportunities for listed property companies. And
you mentioned the sovereign debt crisis. Are there particular regions or areas where you think may be facing the biggest challenges in the near term?
The challenge is that everyone in continental Europe is tied together, and that, of course, is the $64,000 question as to how we're going to solve the issue. We believe there has to be a multi-pronged approach of austerity combined with recapitalization of the banks. So if you look at the tangible equity ratios of European banks and the amount of wholesale funding they're reliant upon, we think it's a precarious position with the banks, and they need to, as this sovereign debt situation is worked through, they need to recapitalize.
And just this past year, REITs in the U.S. celebrated their 50th anniversary. So now looking at Europe and kind of playing off what you just said with your last answer, does the potential exist for the securitized market in Europe to really kind of have that impact on both the real estate market and the financial markets in general?
The allocations to real estate securities are happening as we've all hoped, and that, of course, will help facilitate the growth of public market in Europe. But we need the system to work better in Europe, and so that's why it's really important in all countries for all participants to try to help improve the REIT legislation in each country. We need to work on market structure and how these companies access capital. That, combined with the fact that because of the financial system stresses, the conditions are better for real estate to be pushed into the public market. And for my earlier comments on the banking system, we think that there's a lot of work that needs to be done to deleverage Europe. In addition to the financial system stresses, when you just think about the leverage that's in the system combined with the aging of the populations here and the slow rate of growth, that's a challenging set of circumstances to have the type of leverage that they have in Europe. So we think that this needs to be sorted out, and because real estate is such a big part of that equation, that ultimately the public market will be a provider of equity capital to help reduce the leverage in the system.
Joe, thank you very much for joining us.
Matt, it's been a pleasure. Thank you.
For more on the global real estate investment landscape, be sure to visit REIT.com as well as EPRA.com.